Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after a roller coaster ride last week, the Australian dollar has started the new trading week on the back foot. But there is plenty ahead that will liven up the direction in the coming days. The market shrugged off on Friday Chinese data that was pretty much so disappointing, as the GDP shrunk by negative 6.8 in the first quarter, worse than the forecasted at negative 6.2, and the worst reading in almost 3 decades. Also, retail sales crushed the forecast of negative 10% and came in plummeting at negative 15.8. Looking ahead is that the Aussie, as it currently trades in the narrow range, looks towards the RBA minutes, and it is viewed that this policy statement may trigger mixed reactions to the currency rate if the central bank represses speculation for additional monetary support. And then later on Tuesday, eyes turn to the RBA governor's speech. It is likely markets are still wondering whether we are going to see more from the central bank or whether their bond buying will ease off sooner rather than later. Looking at the technical aspect, the resistance is holding relatively well at 63.85 after briefly testing it on Friday. Above there, the market most probably will be a little bit hesitant, as it was previously at the 64.40-45 level, also seen as a moving average of 60 days. And along with that is the broad downtrend. So there's a lot to be said about the upside if the bulls re-enter and challenge above 64-cent handle. I feel the market is gearing up for a bearish traction and therefore looking down towards the lows around 63.05.15. I do anticipate though that the market could actually see further weakness if we take out the trigger level, which is seen roughly around 62.65, and if pulled could reinstate the downside to 58.40 to 60. The euro pretty much is holding to a consolidated pattern, even though the US dollar is attempting to try and climb higher. I'm holding the view to the fact that the euro dollar will continue to remain on a softer approach and therefore could see a move towards 108.30 and down to a target I see around 107.35. Any advances should be limited, with resistance seen around 109.2025 to 109.70.90. The dollar yen consolidates above the level of 106.60.70 and therefore will eventually, I feel, will take out this level and look down towards the region of 105 and reassess from there. Any advances should continue to struggle above the 108 figure 25 area. Little to say towards the pound, as I still hold a neutral view. But that being said, is that the market will most probably entertain a short position around 126.70 to 127.45. Or a break of 123.70 would trigger the move down towards 121.60.70 as a target. The dollar CAD a little bit responding to the oil sell-off this morning, but from the recent attempts to the upside, I still view around 142 as a potential cap. I feel that the market will probably break down further and therefore look towards the region of 139.90, and if that is breached, then I do anticipate further weaker play into this week. The gold takes out the trend support level here, and from that is now exposed a region somewhere around 1,640 to 44. What turned this around was the fact is you can see here that there was a stop in the trend as it broke from that 50 level and now not showing no trend. Therefore, I do feel that from the break of the trend line as well at 1,686 that we should see pressure towards 1,670, maybe down to 60, or where the base is, which is as mentioned around 1640. The view would be reversed if we can take out the top side level seen at 1,710.12, as this would reinstate the target towards the top side level around 1,748 to 52. And wrapping up with oil, well, the market took out the support level of $25.50 and now exposes the region back towards the 2001-2002 low around $20 a barrel. However, if we can see a climb back towards the top side and break above 25.80-90 area, then I do anticipate further gains to the upside and look towards the region of $28 to $30. We are oversold, and I do anticipate from a technical point the MACD hasn't broken down, so we could still see a recovery if in the next 24 to 48 hours. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this new week.